Beijing basically has, whether it's explicit or implicit, a growth target for the year. And the way they achieve that target is they try to get as much what they call high quality growth, which is basically consumption, business, investment, and exports. And then they generate enough growth in the other sectors, you could call it the low quality sectors, which are property investment and infrastructure investment, in order to achieve whatever that target is. So, for example, last year, high quality growth was actually negative, between 1% and 2%. But China set a target of between 2% and 3%. In the end, it grew by 2.3%. And that meant that more than 100% of the growth had to come from infrastructure investment and property development, two areas that Beijing is uncomfortable with because it's very non-productive and generates a great deal of debt. This year, we're going to see the opposite. High quality growth, again, consumption, exports, and business investment, will probably generate between 6 and 7 percentage points of growth. And so I think it'll be unnecessary for Beijing to push a great deal of property development and infrastructure investment. And in fact, we're seeing that both of those areas are growing much more slowly than expected. To achieve growth rates, I suspect will be around 7%. I know the market thinks growth will be 8.5% this year, but I think they're wrong.
Yeah. And what does that mean for the quality of growth going forward? Because that's where there's been a lot of debate as well in terms of how inclusive this growth is, how broad-based this growth is, and what is the administration's objective essentially in bridging the economic divide and perhaps making it more widespread, that is essentially pick up in economic activity.
Well, that's a very important point, Tanvir. I think this year the quality of growth is going to be very high. And what's more, the debt to GDP ratio, which is typically deteriorates by around 4 or 5 percentage points a year, which is pretty bad. This year, I think it's going to be quite flat. But I think a lot of people are going to mistakenly view that as a significant change in China's growth model. And it isn't. What it really is sort of a partial recovery of what happened last year. As I said, last year, more than 100% of all of the growth was the quote unquote bad growth. And the debt to GDP ratio, as a consequence, rose by an astonishing 25 percentage points. So this year we're getting a partial recovery of that, but it's a partial recovery. It's because last year household consumption contracted by nearly 5%. And this year it's going to partially reverse, which will give us a lot of consumption. And the business sector will follow through by investing to serve that consumption. So we'll get pretty good growth this year because of a one-off reversal. But next year, we're back to the same old growth model, where roughly half of the growth is high quality growth. And the remaining part is the part that we don't really want, that generates a huge amount of debt.